Hey everyone, and welcome back to another earnings review. First up, a quick recap of what has happened throughout the day. This was basically the picture at the close. Again, green across the board for tech. Healthcare took a beating. The Dow was down, S&P was up a little bit, and the Nasdaq was up more than just a little bit, thanks to, the tech companies. Now, I do believe that the Dow Jones was down because of United Health. I believe the stock is down 50% or so in the last couple of weeks. If you want me to do a video about that, do let me know down in the comment section below. But in today's video, we are going to talk about the one, the only Nu Holdings. They reported earnings. At the time of making this video, stock is down 4.6%. So what exactly has happened? Let's touch on that in this video. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so Nu Holdings has a market cap of around $60 billion, a trailing 12 months PE of just over 31, and a forward one of 24.5 times. This is a company that is growing quite rapidly. If you look at revenue growth, compound annual growth rate forward 2 years, 26.7%, EPS 35%. So yeah, a fast growing company that I still think is trading at quite attractive prices. Now, since it went public, the stock is up 27%. Of course, it had a big period where it was underperforming and then some. It was trading at around $3-4 or so. Then we went up and up and up. I mean, if we look at the last 3 years, the stock is up 172%. And year to date, with the after hours action, stock is up around 17 to 18%. All right, so what exactly has happened, right? Because this really looks like a terrible, terrible business. This is a joke. So customers were up 19.3 million year over year to just under 119 million. Active customers is up 16.1 million year over year to 98.7 million. Interest earnings portfolio, $13.8 billion. That's up 62% year over year on an FX neutral basis. Revenue is up 40% on an FX neutral basis to $3.2 billion. Now, this is basically what you're looking at. If we're looking at number of customers and monthly active customers, the growth since the September quarter of 2020 has been as follows. So, number of customers increased at a compound annual growth rate of 36%, and monthly active customers at close to 45%, and we have an activity rate of around 83% right now. I mean, if you can continue to grow the amount of customers and yet you still have 83% activity rate, that's not too bad. Zooming out, looking at the big picture, what has happened in the last couple of quarters, we can compare that. So revenue, of course, the year-over-year growth is decelerating a little bit, right? Last quarter that increased 46%. Now we're at 40% year-over-year growth, over 61% in Q1. Gross profit is continuing to increase, but the problem is gross profit margin. We're now at 41%. That was 46% in Q4 and in Q3. And in Q2 2024, that was 48%. In Q1 24, that was 43%. I'll touch on that a little bit later. Net income continues to go up with an annualized ROE of 27%. That has also come down in the last couple of quarters, but that is up year over year. Adjusted net income continues to go up as well, and here an annualized ROE of 30%, which still is very, very good. Now, here they talk a little bit more about Brazil specifically. Brazil is the largest market by far. So they say here that Brazil is still in early innings. We are doubling down. Nearly 30% of Brazilian adults now consider Nu their primary bank, making it the third largest financial institution in Brazil by customers. Now, here you can see the profit pool by key products. We've got here Nubank's gross profit market share in purple for personal loans, payroll loans, SME credit, cards, retail deposits, etc., etc. And as you can see, there still is a long way to go, despite them being in Brazil already for a long time. So this is very, very promising, especially for a company of this size. This is not a small company worth a couple of billions of dollars. No, This is already $60 billion worth in market cap. Mature, but there still is quite a lot of upside. Another market where they see a massive opportunity is Mexico. So here, the same thing. You will look at Nubank's gross profit market share in these areas: cards, personal loans, payroll loans, SME credit, retail deposits. The opportunity, the upside is massive. And this is something that they've touched on last quarter. Well, they were forced to talk about a couple of things last quarter because there was one slide where they basically showed that they wanted to expand globally, which means outside of their core markets. Some analysts did not really like that because they said, look, your core markets, you're doing very well there, but there still is quite a lot of opportunity left. There still is quite a lot of upside left. So why now focus on outside markets? They basically said, look, the majority of our resources, of our focus still is for Latin America. But we think that we can expand outside of our core markets. So we're going to allocate a small portion of our workforce, a small portion of our capital to look elsewhere and expand elsewhere. Because if the model that is working right now very, very well in Latin America, if that can work somewhere else, then suddenly you expand your total addressable market and things will get quite crazy for them. So this is again another example. Of course, here we're just talking about Brazil and Mexico, Colombia, their core markets. I'm pretty sure that Argentina is up next. Moving on to the monetization part of it. So unlocking long-term value through operating leverage and deepening monetization. Here we can see the average revenue per active customers. That's 11.2. Of course, the further down we go, the more they monetize a certain customer. But look at the incumbents. Sits at $43.3. So yeah, the difference here, 25.9, or the average 11.2, whereas the average here, 43.3 for incumbents. There's still quite a lot of upside left. And if you look at the cost to serve per active customer, how low that is, well, this is the perfect combo. So the more they grow, the more they'll monetize. And if they can monetize them in such an efficient manner, well, this is going to be quite a profitable business. Plus, here we can look at the cohorts. Of course, right now, a new customer is, of course, adopting more products today than a new customer did 5 years ago. If we look at this one right here in the middle, number of products per active customer sits at just over 4. Moving on to the credit portfolio that expands with lending driving mix shift. So if we look at the total portfolio right here, credit cards, the percentage there does come down. What did increase is unsecured loans and secured loans as well. We basically went from Q4 2023, that was 20% secure and unsecured loan, we're now at 32%. If we look at total portfolio, that did increase 40% year over year in billions of dollars. Credit cards is up 23%, unsecured loans 71%, and secured loans over 300%. As for deposit, they're telling us building a scalable and sustainable funding base across Latin America. So we can see year-over-year growth of 48% on an FX neutral basis. The black line here is the cost of deposit as a percent of interbank rate. And we can even look at the growth here for Brazil, Mexico, and Colombia. Colombia, of course, starting off pretty small. Mexico, a little bit more mature. And then Brazil is, well, very mature compared to the other two. Moving on to the issues, I'd say small issues. So NIM evolution, expanding profitability in Brazil and investing for growth in Mexico and Colombia. So here we got NIM and net interest income. So you can see that NIM holdings have come down 17.5%. That's down from 17.7%, 18.4%, and it peaked here 19.8% Q2 2024. Q1 2024, that was 19.5%. If you look at NIM Brazil, yes, that has come down, but we've seen it rebound now in Q1 2025, went from 21.1% to 21.8%. Now they did say the following: the risk-adjusted net interest margin compressed to 8.2%, mainly due to growth in the credit portfolio and strategic investments in Mexico and Colombia. And we can see this here as well for net interest margin bridge quarter over quarter. Went from 17.7% to 17.5%, Where do you take the hit? You take the hit here. Mexico and Colombia is down 1.1%. Now, of course, seeing margins decline like this is not great. But if I look at Nu, if I look at management's track record, I trust them. I'm not a shareholder today. I was a shareholder. I think I was one of the first one to talk about this company when it went public. But this is a company where its track record cannot really be questioned just yet. So yes, in the short term, margins will get hit as they expand, as they invest more heavily, especially in Mexico and Colombia. And probably they're going to do this in other areas as well if they really want to grow and maybe grow in a more aggressive way. But does this mean that you should panic? No, I don't think so. We look here at gross profit margin that is also coming down. We're now at 40.6%. That was 45.6% last quarter, 45.8% Q3, 47.7% Q2 2024, and 43.2% Q1 2024. So again, yes, this is definitely not great to see, but I'll start panicking or doubting management when, this goes down and the story doesn't make sense anymore. They said the following: the decline was mainly driven by higher credit loss allowances and increased interest expenses in Brazil. This reflects the rise in the Selic rate, which Nu has not yet fully repriced across the portfolio. Additionally, the expansion of Nu's deposit base in Mexico and Colombia, while a strategically important investment, has placed short-term pressure on margins. So again, as long as this is a short-term issue because of their strategic investments, then it's fine. If these become longer-term issues, then it's not fine. It's pretty simple. Looking at the efficiency ratio, scalable model delivering operating leverage. So the efficiency ratio is defined as total operating expenses plus transactional expenses divided by net interest income and fees and commission income. That's how you get this number right here, 24.7%. That's down from 29.9%. But yes, they did take a one-time hit for the quarter. So the number you should see right now is 26.7%. But if you remove that one-time thing, it's 24.7%. And that has come down quite rapidly over the last couple of years, which is always great to see. Looking at net income, that has increased 74% year over year on an FX neutral basis. Here as well, we've seen return on equity come down, but still 27%, which is better than the 23% we've seen same quarter last year. As for the delinquency ratios in Brazil only, remember a couple of quarters ago when everybody was panicking because we've seen the 90 plus NPLs go up to 7.2%. But then they explained, look, if you look at the 15 to 90 ones, you can see that the trend is coming down, which is what you should be expecting to see in the 90 plus. Look at what has happened. We went from 7.2% to now 6.5%. Yes, 15 to 90 for the quarter Q1, that did go up. Compared to the seasonal impact, they're doing a little bit better here. And if we're looking at the 90 plus, they're doing much better since, that has declined again quarter over quarter, which again goes back to what I said before. This is a management with a very, very good track record. So if they tell us something, then right now I am inclined to believe what they're selling me, which is probably why the market reacted a little bit better. Right now at the end of the video, the stock is only down 0.7%. Remember, we started the video, was down 4.6%. We're now only down 0.7%. So we're back at $13. Why is that? Because if you zoom out, this is still an amazing business that is growing quite rapidly. It's quite profitable, especially in the industry that it's working in. It's one of the best players out there. So you're going to say again and again, so why aren't you holding this company? I'll repeat the same story. I used to own it, did very well for me, but like I said, I consolidated it all in Mercado Libre because I wanted Mercado Libre to become an even bigger company, and it also gets me exposure to fintech in Latin America, but not just fintech. It gets me exposure to e-commerce, to advertising, to fintech, to logistics, you name it. It's basically Amazon without AWS in Latin America. So yeah, I'm quite happy with that. Plus, I think I have enough exposure to fintech in my portfolio as is. But who knows, maybe in the future, Nu will come back. But as of right now, again, a very good quarter. This is why the stock reacted negatively first, and this is why the stock is now reacting a little bit better. So there you have it. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.